Hi and welcome to the Market Alert for Friday, the 31st of March 2023. So US stocks were mostly higher as tech strength persisted during yesterday's session, and stocks gained again despite bank weakness and haven strength. So the bank weaknesses are coming back in, and as seen by this article here, deposits have finally awoken. The second wave of bank run has begun, Barclays warns. And the elites are bailing out their own banks, not yours. The printing of $37 trillion out of thin air over the pandemic widened the wealth inequality gap. And they followed that up with the most drastic and rapid interest rate hiking cycle in Fed history. It's only going to get worse. Gold gains as banks buckle again, dollar dumped. So, the second round of bank failures seems to be en route. As I've said all week, the market's been free to go up, no major economic data, and so far this week, no more banks saying that they need funding, but obviously that's starting to bubble to the surface now. Things are starting to look slightly different, and it's interesting, if we have a look at the Dow now, that these things are starting to come after a week of market gains, significant gains actually in the markets. Given this time last week, Deutsche Bank was falling out of bed, and so far we've up 1,200 points in the Dow. The bounce is looking good, as can be seen here. We're also close to the 78% retracement, and also to the left here, let me just grab this and draw this on for you, to the 33,000 on the upside there, and that's where the selling took place before when we saw prices move lower. So there's looking at it, we've got a bit of weakness coming in overnight. The market rallied to begin with. We're still above the 50 EMA in the Dow, and also these two levels here will become support areas. So take note of these if you do trade the Dow, if the market starts to drop. In the 30-minute chart, yesterday we moved up sharply. We saw weakness yesterday afternoon with prices coming down to the close before again rebounding overnight. But you can see the market's traded up to the high. It's put in a retracement and it's now heading south. It will need to stay above the close, the DP, the 50 EMA, and if not, then we could sail down to the S1 and yesterday's low. It was very, very interesting price action yesterday. It was pretty bizarre at times. So something again is going on in these markets. But I would expect, given the number of articles that are coming on board now with regards to the second wave of bank problems and issues, then we're going to see a bit of weakness during today's trading session. It'll also be worth keeping an eye on Deutsche Bank, which we'll come to in just a moment. And in Germany, the Deutsche Bank, they're up yesterday, 89% retracement, an inflection point for the market, a resistance area as well, given that the market has also put on a few quid over the last few days. Let's have a look from Monday's low up to the overnight, 784 points, bonkers. But it has, and now it could see the market actually start to move to the downside off this. So let's just draw in a few areas of where you could see some support. 5 MA would be first and the low of yesterday, and then you've got the 20 and the 50 there, along with the 50 fib as well. So they would be the first two areas. 30 minutes yesterday, again, massive move to the upside, just kept going. Barely any red bars on the downside apart from lunchtime, where it soon reversed off, and then the afternoon and then evening continued to move up. Just like the Dow, the market sailed through the high on the overnight, up 80 points, and now sitting at the low. And we've got a bit of selling coming in there as well, having broken the high. Needs to stay below this if we're to trade down to the close. The 50 EMA, the DP, etc. So watch those areas for support. At the moment, this is what we've got in the 5-minute chart. You can see how they blasted the market up there. Let's just have a look out of curiosity. I think it's about 80 points, isn't it, up to the high. 68, a bit overzealous on my part there, but, give or take 12 points. ballpark. So there you can see what's happening at the moment, and the high's been taken out. Whether this holds or they try and bring it back first and run it up a couple of 100 points, who knows? But not looking good at the moment, despite this, potential second wave coming around there. But I wouldn't be surprised to try and bring it back first until they get confirmation of potential second wave there of bank failures. In the implied volatility, interesting picture as well, because we've got 1602 up from 1558, and yet the market went up. So this is also indicating to me that all of a sudden the option sellers are starting to see some form of potential weakness coming into the market, given, as I say, the Dow having moved up over 1,000 points plus this week, and also the DAX having moved up nearly 800. So there's a bit of a change of heart here that we could see a correction coming. S&P 500 also moving to the upside there. Let me just have a look from this high down to here. We're just through the 89 there. So again, I'd expect the market to show some sort of hold initially. We're at 40, 66, somewhere in that area. We've got to get back below 4,000. 4,000 is going to be a psychological level for the S&P. Let me just bring this into the 30-minute and just show you. We're looking down here at the 4,000 level. It's going to be crucial that the market holds at this level for the S&P. So trying to come back below the high at the moment, but finding a bit of support there in the 30-minute chart. Meanwhile, the FTSE, also having piled on a few quid this week, is starting to look a bit like it needs a retracement as well. Up 611 points on the FTSE this week, so definitely due for a bit of a breather. Towards the 62% retracement there, and also the 50 EMA. Bit of supply coming into the market there as well, and overnight the market not going up to the high, unlike the other indices. Yesterday, though, big move to the upside, just under 100 points, I think. Let me just check that. Again, just looking at it ballpark. Let's just go from there up to the high. 171. Yeah, I thought it looked bigger. So 171 points up for the FTSE yesterday. And it got your retracement overnight, and now just making its way down. The close is a very important level as well. Market likes to try and bounce off the previous day's close, again, because in a bull market it shows a bit of strength. But first and foremost, they want to get through the high. If you can take out the previous day's high, if you just look at a daily chart, it's always good news, because then it shows the strength if it can hold above this level. And then the next one is the close in a bull market. So there's your close the day before. Then they managed to get above the close in this bar, and the same in this one. So that's why the close is just as important in the stock market or any market. If you can get above the previous day's close and start moving to the upside, then it just adds to the bullishness of the move. In the currencies, GBP JPY up at 89% retracement on the Asian market as well. And in the 30 minutes, so running out of steam there. Yesterday, moving up, coming off the close. Again, you see how important this is. Up and then off the high, and the high becomes support, and moving the market up to make new levels up to the R2 on the overnight. Now finding support at the previous day's high. I would need to get back through the R1 BRN to get back to the R2, which is the new high made overnight. If not, we go to the close, which has got the 50 EMA, which would be a support area for the market to bounce off. If it fails, it will go down to the DP and stop. If it goes through the DP, it will go down to the S1, etc. with the BRNs in between. That's the big round numbers, or psychological levels, however you wish to view them. In the pound, also trading up to the resistance. If we go from there to there, we're just through the 89. Very similar picture as we've seen in the GBP JPY. The market needs to get back through the 123.75 if it is to move lower. And in the 30-minute chart for the pound, again, you can see yesterday coming off the low. Again, very important level. You can't have a chart without these lines on. I'm telling you, they're just so important. So at the close, We come back, we go to the DP, we go up to the high, we then come back to the DP, and then we go off the DP up to the R1, R2, sorry, through the R1, and then the R2, the market stops, that becomes support, and then overnight we have to get through the close, and we see how the buying increases through the close, and then we've got the selling coming in, stopping the move, and then the market coming back to the close and sitting on it. So what it does, the lines actually give areas of where you could call them junctions in the road or whatever, where the market's likely to find the support or resistance. And then as sentiment changes from the daily chart, i.e. trading up to the 89% retracements, and then the news starts to say, well, hang on a minute, there are going to be a second wave of bank problems, and the implied volatility where it shows the options traders are becoming reluctant to sell the options at a lower insurance rate, then you start to see things switch and start to change, and then you'd start looking to the downside. And as the market makes lower highs in the daily, then the previous day high becomes a resistance area, etc. So you're just trading with the flow of what you see in the market, with a few fundamentals thrown in just for good measure. And in the dollar index, a bit of strength coming in there overnight, down yesterday. This added to the bullishness of both gold and silver, which we'll take a look at now. So silver yesterday driving up towards that 24, got hammered, and I think you're going to see a bit of a retracement in this during today. Yesterday it managed to drive up nicely, but came back to the R1, again coming off the close yesterday in the session, coming back to the R1, driving through these areas till the brakes were put on, with news from the US at lunchtime, claimless counts, and then sideways, driving through sideways, trying to get through the high. The high's become a resistance because that high is the $24, and as I've said many times before in the market alert, they don't want it above $24, so they're likely to move this down if the dollar continues to move to the upside. Meanwhile in gold, not trading back at the highs like silver, which is unusual, very unusual. Gold tends to dominate and lead, 62% retracement, bit of weakness there overnight as well. Just take a look at yesterday, again coming off the low and the S1, moving up, then the DP becomes the support and the close, you see the close there, and then the market moving up through the high, because you want to keep the market moving higher if you can, a big bar to drive through, market sideways, overnight sitting at the close and trying to come off the close at the moment. Let me just drag that across so you can see it. So you got the close there, and you see how the market stopped there, and the high there as well. And finally, the gold silver ratio dropping again to 82. This has moved over 10 to the downside, so we're expecting a bit of a bounce here in the silver market to be moved lower. Two other things that I forgot. We've got news today, not a lot to shout about. Flash and core CPI, PCE at lunchtime for the US, Chicago PMI, revised sentiment, and Lagarde's out at 4 p.m, more or less after the market's closed. And also Deutsche Bank up again yesterday. This is a 30-minute chart. You can see the move there. Just have a quick look at the daily chart. It'll be interesting to see where this opens at 8 a.m. Sorry, 8 a.m. when it opens on the IG platform. Let me drag this over a bit so we can see the actual price there as well. So this market having come up from Friday's low of €7.49, well, make it €8, up to the high yesterday of, $9.41. So it's had a bit of its dead cat bounce that we saw before, and then it came off. So I expect a bit of a pullback in this one too. Okay, that's it for this one. As ever, thanks for watching. Have a great weekend and see you in the next one.